Hello financial fans, welcome back to another stock analysis. Today we'll be looking at Applied Materials, ticker AMAT. Applied Materials is a prominent player in the semiconductor equipment and materials industry. Currently they're sitting at a 21.6 billion market cap and generated just under 26 billion in revenue in 2022. Currently their dividend yield is sitting at 1.07%. Applied Materials has different operating segments. They design, manufacture and sell equipment used to fabricate semiconductor chips. They also design, manufacture and sell equipment to make flat panel displays. And they sell and manufacture equipment used to fabricate solar cells, modules and flexible electronics. Currently 86% of their sales come from Asia Pacific region. 9% come from the United States and the remaining 5% are from Europe. To calculate our final valuation, we'll be using a margin of safety. This margin of safety will be determined by looking at some financial ratios and looking at the financial health of Applied Materials. We'll be looking at these ratios in just a bit, and we'll be determining the margin of safety by using a scale. When we are using 4 colors, bright red will mean 5% added to the margin of safety, orange will mean no change, light green will mean a deduction by 5% to the margin of safety, and bright green will mean a deduction of 10%. When we're using 3 colors, bright red will mean 10% added to the margin of safety. Again, orange will mean no change, and bright green will mean a 5% reduction on the margin of safety. First, we'll be looking at the EBIT growth and the margin growth. The margin growth has gone up pretty significantly over the past 5 years, going from $2.1 billion to over $7 billion in 2021. The average growth in these years has been 33%. This means 10% will be deducted from the margin of safety. Looking at the margin, also this has been going up. On average, the margin has increased by just under 11%. This means 5% will be deducted from the margin of safety. Next, we'll be looking at the dividend growth and the payout ratio. The dividend has been going up in some steps, going from 40 cents a share in 2014 to almost $1 a share yearly in 2021. The growth has been 17% annually over this time period. This means a 17% annual dividend growth. And again, this will mean 10% will be deducted from the margin of safety used at the end. The payout ratio is currently sitting at just under 14%. This is a very good sign, as they are not spending most of their money on dividends and keeping a lot of earnings retained. This will mean a deduction of 5% to our margin of safety. The next ratios we'll be looking at, and the final ratios these are, is the debt to equity and the return on invested capital. As we can see, the shareholders' equity is far larger than the liabilities that Applied Materials currently has. The ratio then is 0.28, meaning that it's in the bright green area, which is 5% deduction on our margin of safety. The return on invested capital for Applied Materials is currently sitting at 36.3%, which is in the bright green area once again. This means another deduction of 10% to our margin of safety. Let's look at the valuation models, where we will be determining the intrinsic value of Applied Materials next. The first valuation model that we'll be using is the discount cash flow model. I have imported the free cash flow from 2012 till 2021. From this cash flow, we can see that the average growth is 43%. Since we are calculating the lifetime expected growth of Applied Materials, I've gone with 20% of the average growth, coming in at just under 9%. With this growth percentage, we can determine the future free cash flow of Applied Materials and also the terminal year of valuation. In this calculation, we'll be using a discount rate of 9% and a perpetual growth rate of 3%. Combining all of these free cash flows, we come at a sum of free cash flow at just under $115 billion. To get our equity value, we'll be adding the cash, which is just under $2.6 billion, and subtracting the total debt, which is just under $3.5 billion. Then the equity value will be determined at $114 billion. To get a discounted cash flow price per share, we'll be dividing this with the shares outstanding. The shares outstanding currently is sitting at 844 million shares. With this calculation, we get the discounted cash flow price per share, which is $135.13. With the current price of $96.72, we get an upside of $38.41, which is just under 40%. The next model that we'll be using is the dividend discount model. By importing the dividends that Applied Materials has paid in the last 5 years, we'll be calculating a growth rate. This growth rate has been just under 7% in dividends. Once again, we'll be calculating an expected growth rate that Applied Materials will have, and I've gone with 80% of the growth rate. The discount rate that we'll be using is once again 9%. Since the growth rate of the dividends is far lower than the discount rate, we come at a very low price per share at $30.78. This means the upside is actually a downside of just under $66. And this means the downside in percentages is just under 70%. The last model that we'll be using is the multiple valuation. By looking at businesses related to Applied Materials and do the same business as they do, we can compare them and their PE multiples. This we'll be doing by having their stock prices and dividing them by the earnings per share. The average PE of the peers selected here is coming in at just under 21. This will then be multiplied by the earnings per share that Applied Materials is generating. This comes in at $7.44. With this, we get a fair value of $154.44. With the current price of $96.43, we get an upside of $58, which is 60%. Let's go take a look at the final valuation of Applied Materials. Looking at our final valuation, we'll be taking the average of the discounted cash flow, the discounted dividend, and the multiple valuation models. The average in there comes in at $106.78. Then we'll be using the margin of safety that we have calculated before this. In this case, it's minus 15% due to the good numbers and good financial health that Applied Materials is showing. The fair value then comes in at $122.80. With the current price of $96.43, this is an upside of 27%. If you don't want to use the financial ratios and the margin of safety that we have calculated here, you can put in 30% here, and then it would actually be a downside of 22%. I hope you enjoyed watching this video. If you have any company suggestions, please let me know. Thanks for watching.